Good day, everyone. Allow us to help you jumpstart your accounting journey with us with this three-part accounting presentation for Accounting 101A students. Let's start. A lot of people often wonder, what is the importance of accounting? Who needs accounting? And why study it? Well, let me answer those questions by telling you that accounting is relevant in all walks of life. It is particularly essential in the world of business. It is so essential that, across centuries, it has evolved in response to both the social and economic needs of society. Speaking of the evolution of accounting, here are some fun facts. To fully appreciate accounting, let's take a look at its many definitions, starting with the most loved of them all. Accounting is the language of business. Have you ever wondered how these businesses are faring in this time of the pandemic? Do you ever think about whether they will survive this very huge challenge? The answer, my friends, lie in their financial health. But how do you know whether a business is financially healthy or has been struck by some deadly financial virus? The answer? Through accounting. Accounting measures economic business activities. It quantifies and processes information into different reports and communicates the result to decision makers. Accounting will tell whether the business is doing good or bad. It is for this reason that accounting is considered a language of business. The more technical definitions of accounting involve accounting is a process of identifying, recording, and communicating economic information that is useful in making economic decisions. So you see, as accountants, we don't only measure, we also communicate. And it is through this communication that we help decision makers make crucial decisions. That is why we are called the scorekeepers of business. Another definition highlights accounting as a service activity. This means that as accountants, we do not necessarily produce tangible products. Rather, we render our service. Kind of reminds you of the Little Prince. What is essential is invisible to the naked eye, right? Accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions and events, and interpreting the results thereof. Yay us! We are performing art. From these definitions, we can then deduce three essential elements. First, identifying. The accountant analyzes each business transaction and identifies whether the transaction is an accountable event or a non-accountable event. This is because only accountable events are recorded in the accounting books. Second, recording. The accountant recognizes, therefore records, the accountable events he has identified. This process is called journalizing. After journalizing, the accountant then classifies the effects of this event on the accounts. This process is called posting. Third, communicating. At the end of each accounting period, the accountant summarizes the information processed in the accounting system in order to produce meaningful reports. Accounting information is communicated to interested users through the accounting reports, the most common form of which is the financial statement. From these elements, we can therefore point out the following four phases of accounting. Recording, through the use of our journal entries. Classifying, for when we group together like items. Summarizing, through our trial balances and financial statements. And of course, interpreting, where we help users make sense of the information. Remarkable, right? Let us now take a look at the nature of accounting. Accounting is a process with the basic purpose of providing information about economic activities intended to be useful in making economic decisions. Key in the statement is the word information. The first type of information provided by accounting is quantitative, which is that which is expressed in units or quantified. The second type of information is qualitative, which is that expressed in words or descriptive form. And the third type of information is financial information, which is that expressed in money or monetary terms. Accounting is also an information system. The inputs are the events, the processes are recording, classifying, and summarizing, and the output is the report that is communicated to the users. That, I believe, is what makes accounting a science and a practical art. Part of accounting's indispensable role of being the language of business is its twofold function. First, to provide external users with information that is useful in making investment and credit decisions. And second, to provide internal users with information that is useful in managing the business. And so, who are these users? Internal users are those who are directly involved in managing the business. Examples are business owners, board of directors, and managerial personnel. External users, on the other hand, are those who are not directly involved in managing the business. Examples are existing and potential investors, lenders, and creditors, including non-managerial employees and the public. So you see, a lot of groups and individuals look up to accounting for their information needs. As accountants in the future and as accounting students today, you will observe that businesses come in different shapes and sizes. If we look at their activities, we can clearly see that businesses can either be service, or those companies performing services for a fee, merchandising, or those companies that purchase goods that are ready for sale and then sell these to customers, and manufacturing, or those businesses that buy raw materials, convert them to products, and sell to companies or final consumers. Have you interacted with any of these businesses lately? Next time you transact with these entities, try to identify whether they are service, merchandising, or manufacturing. A person engaged in business is called an entrepreneur or businessman. Businesses in the Philippines are organized in one of the following forms: sole proprietorship, or that which is owned only by one person or one individual, called a sole proprietor. You can also have a partnership, where this form of business is owned by at least two individuals and is formed by contractual agreement. You could also have a corporation, which is a more complex form of business organization formed by operation of law and owned by what we call shareholders. And then there's the cooperative, where owners of the cooperative are called members and they adhere to a certain set of qualifications or criteria. A cooperative is formed in accordance with the Cooperative Code of the Philippines. Needless to say, the types of business organization, whether according to the activities they perform or the form in which they were organized, come with its own set of advantages and disadvantages. Some reading materials will be provided for you about this. Well, that's it for now. See you soon.